Markets continue their slide this week, today reigniting some trade war fears between the U.S. and China. As a result, volatility jumped up. Safe havens, which were the underperformers yesterday, surging to being the outperformers here today. And so we're going to talk about what happened. As always, if you want today's full setup and breakdown, deep analysis, as well as today's trade idea, you can get the full video at marketscholars.com with the link in the description, as well as the pinned comment down below. We did just pass July expiration. I've been gone for this past week. But while I was gone, before I left, we finished July expiration. We finished all the options, all the trades from these market outlook videos that we do. We do one trade a day. We finished pretty much all of them for the month of June. And we ended up making about $3,000 on all of those trades combined, with one still outstanding, a long call that we've done that we're still in, that we've rolled and still in. So it puts the amount that we don't put very much at risk. We had at most $13,000 at risk at any given time during the month. So pretty decent amount, pretty decent return. Not too bad for $29 a month, which is what that market outlook, the foundation, market outlook foundation level costs here at marketscholars.com. So let's go ahead and get started with today's video. All right, midday volatility spiked a little bit today after news broke that the trade talks between the U.S. and China in Stockholm ended without a deal, without any some progress, but not necessarily any significant progress made. So these fears of renewed tariffs sent risk assets down a little bit, and safe havens moving sharply. You can see the S&P closing below yesterday's low after starting the day strong and getting up to a higher high. The VIX jumped over 6% today, getting up to almost 16. The short-term VIX, the VIX 9-day VIX, we look at sometimes here, also jumping up to almost 15, climbing more than 9%. So one of your bigger moves that we've had here in the short-term volatility index in a while. You can see it's been we've had a few of these about as big back in July 21st and July 7th, but we don't typically get this size of a move on a day like today, where there really wasn't that big of a move, a pretty small range. Bond yields sank across the curve, especially the 10-year. You can see that TLT, if we were to pull up TLT here, the bond price ETF jumping up almost 1 2/3%, nearly 2% there, as traders rushing into safety before the Fed's FOMC meeting. Not expecting a rate cut at this meeting, but anticipating the Fed starting to lay the groundwork for a cut at their next meeting. You can see commodities really jumping higher. Crude oil and gasoline, look at those big jumps that we've had in the last couple of days. Gold prices rallied quite a bit to the upside. You can see some of these other metals moving as well, and natural gas jumping up just a little bit, continuing their move that they've had. So commodities all part of this inflation trade and defensive trade. Remember, XLE, the sector for energy, typically outperforms the market when the market's not doing very well, and we're kind of seeing that today with energy, utilities, and real estate being. Well, let's pull that up. Get this up here. There we go. Utilities, real estate, energy, staples, all really being the biggest outperformers today. So as trade tensions become a topic again in the markets, and volatility starting to move up over the past couple of days, we're starting to see just a little bit of a shift in market sentiment. How significant that is. Of course, I take a much bigger dive in our full market outlook video, and if you find these insights useful, make sure you're subscribing to the channel down below. Click that like button, click the share button to let others know about this, as well as comment down below anything that stood out to you today. All right, so let's dig a little deeper into what's moving the market here today. This textbook risk off rotation, again, with the S&P really only down 1/4%, maybe 1/3%, in a very small range. You had, again, your safety trades all leading to the upside. Energy, technology actually still outperformed the S&P. Every other cyclical sector, industrials, discretionary, communication services, financials, materials, all, I mean, usually materials and energy go hand in hand, not today. Usually, healthcare is up here with the safety trades. Not today. It behaved more like a cyclical area with all these others all underperforming at the S&P to the tune of returns of 0.5% to a full percent down to the downside. As I mentioned before, TLT doing as well as it did, and you can see the jump again closing higher than we've seen in multiple weeks now, and the intermediate line working its way up. Green line, light green shading, and you're that not very far away from getting dark green shading. So this seems to be a pretty clear shift towards long-term bonds right now. And this really wasn't just technical. There's between the tariff news with China and the deal that's going on there, and the Fed meeting, and all the pressure right now that's on Powell to cut rates. You can see that the investors are bracing for volatility by shifting towards safety assets, and you can see all day long today moving in towards bonds. And after declining for 4 days in a row here, gold found a little bit of support at the point of control. You can see that's where the point of control is, just a little bit below the 50-day moving average. You get a break of that support, and you can see how much farther it would fall. Again, would probably be coincident with a strong move higher in the dollar, which can put some pressure on risk appetite. So again, on the surface, it seems like just a small down day, no big deal, still above moving averages. But there seems to be a little bit of a shift in tone across different markets, not just the equity market. The question is whether this move has legs, or if it's just the start of a larger unwind, or if it's just a little bit of noise, resulting ultimately in a bounce back up and a continuation of this bullish trend. So, as always, I break all that down in the full market outlook video in a lot more detail. 30-minute video versus this 5-minute video. It's complete with charts, deeper macro insights, and today's trade idea. As I mentioned, we do a trade idea every day. We keep track of those trades. We manage and keep track of how we do on all of the trades that we do in the market outlook. You get access to that. All of our subscribers, starting at our foundation tier, get access to these full-length videos, as well as the Market Outlook Live and the Trade Tracker there. You can join today for just $29 a month and start getting daily access to that. Again, thank you very much for watching. Remember to subscribe to the YouTube channel, like the video, comment down below. Join us at marketscholars.com. There's the link up at the top of the page where you can join our site for free to see the Market Outlook blog post, as well as you can follow us on Twitter, Facebook, all of our social medias, and be able to see us there. Again, thank you very much. Have a great rest of your Tuesday night, everybody, and we'll see you all tomorrow.